Good day everyone. So in this video I will be discussing what is value added tax, output tax, or output VAT. So value added tax or VAT is a form of sales tax. So it is a tax on consumption levied on the sale, barter, exchange, or list of goods or properties and services in the Philippines and on importation of goods into the Philippines. And it is an indirect tax which may be shifted or passed on to the buyer, transferee, or lessee of goods, properties, or services. And the VAT rate here in the Philippines is 12%. So, who are required to file VAT returns? So, these are the persons required to file VAT returns. Any person or entity who, in the course of his trade or business, sells, barters, exchanges, leases goods or properties, and renders services subject to VAT. If aggregate amount of actual gross sales or receipts exceed 3 million pesos. And a person required to register as VAT taxpayer but failed to register. And lastly, any person, whether or not made in the course of his trade or business, who imports goods. So let us then define output VAT and then distinguish output VAT from input VAT. In the output VAT, it is the VAT on the VATable sales or receipts. The output VAT is presumed passed on by the seller on his sales or receipts. So there are two types of output VAT. So the first one is regular output VAT. It is the 12% VAT imposed on domestic sales or receipts. And the second one is zero output VAT, which is the 0% VAT imposed on export and other zero-rated sales. So when we say input VAT, it is a VAT or taxes occur from the purchase of goods or services. So conversely, output taxes occur from the sale of goods and owned services of a VAT-registered person. So these are actually the indirect taxes that could be shifted or passed to the buyer of goods and or services. So we have our first illustration. So SSD company sold 100,000 pesos on account inclusive of VAT to RDS company. Both are VAT registered. So SSD company's purchases in cash for the quarter is 78,400 VAT inclusive. So to record the sales with output VAT, so debit accounts receivable 112,000, then credit sales 100,000, and output VAT credit 12,000 pesos. So next is illustration 2. So SSD company, a VAT registered entity, sold 100,000 pesos on account. The sale is zero rated. So SSD company's purchases in cash for the quarter is 78,400 VAT inclusive. So now for the generated sales, there will be no after tax or output VAT, but it can still claim input VAT from related purchases. So to record the zero rated sale, we just debit accounts receivable 100,000 pesos, then credit sales 100,000 pesos. So that will be the last discussion about output VAT. And I hope you learned something about my discussion. So that would be all for today. Thank you for watching.